Tuesday, July 18th, 2017, Monaco 64, home of alternative economics and contrarian views. So the dollar is in meltdown mode still, not completely crashing, but very weak. Dollar index is down almost, more than 1/3%, about 0.4%. So euro breaking up above 115 cents. We're 115.24, up 0.4%. The Japanese yen is going up together with the euro and the pound this morning. The dollar's down 50 pips against the yen, or 0.5%. Dollar down to 112.11 here. It's 7 a.m. London. The pound is back up to 131, up 1/3%. Spot gold up $3.50 at 1237.50. Sorry, the high's been 1239. We've got that 1240 level still as resistance. Silver up 4 cents at 16.15. The high's been 16.24. So we are off the highs in the precious metals. One thing I like to say about the dollar index, and I made a video about this months ago, and I'll put it up in the card, is how over the years, yes, the dollar index is an indicator of the weakness in the dollar against other fiat currencies. But you cannot hedge completely against the loss of purchasing power of the dollar and all fiat currencies by using the dollar index. Dollar index started out in the early 70s, and the index at the time was 100. Right now, dollar index is 94, below 95. So yes, it has come off recently, from almost 104 to around 94.80 right now. Against the major currencies. But gold in the early 70s, up until Nixon closed the gold window, was at $35 an ounce, and now we're at $1,200. So, and silver as well was, I think, I'm not sure how much it was, but it was between $1, $2 back then, or maybe even a little less, and now we're at $16. So precious metals are still the best way to protect yourself against fiat currency debasement. But of course, the dollar index gives you the direction of the main, fiat currency, the US dollar. I still think they're all going to sink because they're all based on the US dollar. The US dollar is the anchor of the system. And if the US dollar is falling, that's a bad sign. But ultimately, the US dollar can only be debased or devalued or reset, if you want to call it, against real things. And the real physical non-national currency that has a track record of thousands of years is gold, and also silver, of course. So yes, the dollar is weak right now. We've broken through 95. I've spoken in previous videos in the last few days and weeks. You can go back to them. I've done technical analysis. I'm not going to do the technical analysis now. I spoke about how 94 is a key level. Not a completely the most important level as I see right now. More like a target. But the key level below is around 92 even, or to be more exact, 91.91 in the dollar index. So what's driving this fundamentally? Well, I think it's the fact that the central bankers, they just take turns. They manage their currencies, they manage their policies. And I think the market also doesn't buy into the Fed's latest pronouncements of how the U.S. economy is doing so well and how they will be able to normalize monetary policy. I think what this is showing, the weaknesses in the dollar, is that normal monetary policy is not possible unless you want to bring the whole system down. You know, if you keep raising rates and if you keep cutting down the balance sheet or winding down the QE or quantitative tightening, people have to wonder, because a lot of the cash that's been created by QE, the major banks, what they've done with it, I think they've got over 2 trillion. They've parked it with the Federal Reserve, as deposits. If you look at the charts, and I won't put the charts right now, but before QE was started in 2008-9, none of these banks kept any cash with the Federal Reserve. So my question is, if the Fed does decide to unwind and this QE and take their balance sheets from about $4.5 trillion right now to 2 trillion, what are the banks going to do with that cash at the Fed? Are they going to keep it there or start buying real things in the world, in the real world? Right now it's just a game. You know, the Fed creates these currency units out of thin air. The banks take it, give the Fed their assets, like toxic assets, like mortgage-backed securities and U.S. Treasuries. I'm going to call them toxic as well, because it's amazing how much debt the U.S. has, and also all the other countries. So that's just a game right now, and they're able to keep that 2 to 2.5 trillion, of cash with the Federal Reserve, and that's not sloshing around in the economy. Can you imagine if all that cash comes out? That isn't necessarily a good thing. People might lose confidence in cash, and that creates, that hurts the currency. Yeah, what are they going to do with that 2.5 trillion, the banks? Are they going to be buying treasuries that the Fed is not going to be buying anymore, or selling? I don't think so. Would you really want to do the opposite of what the biggest buyer of an asset has been doing for the last few years? If someone comes and says, well, we're going to start buying all the BMW cars in your neighborhood. Well, you buy one in advance, don't you? And then a couple of years later, while they're still buying, you sell it to them. You use it and you can still sell it to them. But if they come out and say, wow, we're going to unwind all these, all this fleet of BMW, and we're going to start doing it now, I would start selling mine. I wouldn't, take the cash that I got from selling mine and start buying BMWs just as this big entity started selling it. That's what's going to happen, and maybe that's what the dollar is telling us, and all the other currencies. I know the dollar is weaker right now, but as I said, fiat money can only be truly devalued against real things. So that is the elephant in the China shop, in my opinion. All these excess reserves, as they call them, trillions and upon trillions being held by the banks in their central banks, with their central banks. What's going to happen to all that cash once, these central banks start trimming their balance sheets, if they ever can? This is really interesting. So weak dollar, of course, the other currencies are a little stronger, but this is more a message to the people in Europe, who use euros, British people who use pounds, Canadians who use Canadian dollars. Don't be fooled by the fact that the dollar is going down. Don't think that you can just protect yourself by having your national currencies. You can't, because they're going to go down as well. Everything will go down against, the currencies that have the best track record, the currencies that are insurance, the currencies that you can touch. and hold on to it with no counterparty risk. And that is gold. Those currencies are gold and silver. Not even cryptocurrencies, are as good insurance as gold and silver. I can't hold Bitcoin. I can't hold these ICOs. I can't hold, Steam. Even Steam, I can't hold it. It's all digital. Something can happen, that you can't get a hold of them, but a coin, a gold and silver coin, you can hold on to it. And ultimately, that's the best insurance. Yes, cryptocurrencies are continuing to do well. In my opinion, they will, but they are more speculation than peace of mind. You can sleep soundly at night knowing that you have physical assets in your possession and that there's no one in between you and your assets. But you can't do that with cryptocurrencies. I'm sorry. I'm not downplaying cryptocurrencies, but that is the fact. It's a true fact. You're dependent on electricity, that you can turn on your computer in the morning, that you have access to the internet. I used one of my Wirex card recently and tried to take some cash. Didn't work. I've contacted them, and now it's going to take about 14 days because they actually took the cash from my balance, even though I didn't get the cash from the ATM. It wasn't a huge amount, but right now, instead of having X amount on the Wirex card, I have X minus, what I tried to take, even though I didn't get the cash. So, yeah, physical gold and silver is still the answer. So, as I leave here, 720, gold is now 1238, silver 1616, and yeah, the euro is 115.25, pound is 131, and the dollar is testing 112 yen here. We're at 112.07. So the drop in the dollar continues. Please like, share, and subscribe if you haven't subscribed yet, and follow me on steemit.com, steemit.com. Take care. Bye.